This video is created by Jagrat Creation. It is on joint venture accounts. Here I want to solve one sum wherein no separate set of books are maintained. So independent books for joint venture are not maintained. Then who records the transaction of joint venture? Either one of the partner or all the partners record all the transaction of joint venture. This is one option. Second option, one partner or all the partners records only those transactions of joint venture with which they are party to it, or which are entered between themselves and joint venture, but they don't record all the transaction. So these are the two options. Out of these two options, I am going to solve the sum wherein no separate set of books are maintained and partner records all the transactions of joint venture in his personal books, and he records in a manner so that he can find out the profit of joint venture business, and the profit could be shared between the partners. And to find out the profit of joint venture business, joint venture account is to be prepared, which is prepared on the basis of matching concept, and it is alike to trading and profit and loss account. Observe the sum that I intend to solve here before you. This is a sum that I wish to solve here before you. Just observe. Ram and Rahim entered into a joint venture to take a building contract for ₹24 lakhs. They provide the following information regarding the expenditure incurred by them. Ram has incurred these many expenses. Rahim has incurred these expenses. Which are these expenses? Ram has paid for materials, cement and architect fees. Rahim has paid for materials, cement, wages, license fee and plant. These are the expenses paid. Plant was valued at 1 lakh at the end of the contract, and Rahim agreed to take over at that value. So plant was taken by Rahim at the conclusion of the contract. At the end of the contract, the plant left is taken by Rahim at an agreed value of 1 lakh. Contract amount 24 lakh was received by Ram. Profit and losses are shared equally. You are required to prepare joint venture account and Rahim's account in the books of Ram and Ram's account in the books of Rahim. So we are going to prepare all the accounts. Joint venture account in the books of Ram and Rahim, and in the books of Ram we are going to prepare Rahim account, and in the books of Rahim we are going to prepare Ram account. Let me start. Books of Ram, this is the details of the sum. For the purpose of finding out the profit, I prepare joint venture account. In the books of Ram, I will prepare Rahim account. So this is Rahim account. Now, all these are the expenses of joint venture business. They are going to be debited to joint venture account. The payment made by Ram, in the books of Ram, he says that I have paid cash or I have given check. So when the joint venture account is to be debited, he will write in his books to cash account or to bank account, just like this. Material 6,80,000. Joint venture account debit to bank account. This is the payment made by Ram. But so far as these 5 lakhs are concerned, they are paid by Rahim. So Rahim is the giver, credit the giver. Rahim account is to be credited. So joint venture account debit to Rahim account credit. So Rahim has paid, so Rahim account is to be recorded here. Material 5 lakhs. Same with cement. When Ram pays, he writes to bank. But when Rahim pays, it is recorded to Rahim. Joint venture to Rahim. The total will be credited to Rahim account. Wages 2,70,000 paid by Rahim. So joint venture account debit to Rahim account credit, that is going to be recorded. Architect fee paid by Ram. Ram has paid to bank account architect fees. So these are the expenses paid by Ram. For that he writes to bank. These are the expenses paid by Rahim. Joint venture account debit to Rahim account credit. License fee paid by Rahim. Joint venture to Rahim. Plant expenses paid by Rahim. Joint venture to Rahim. So these are the total expenses paid by Rahim. 11,90,000. So 11,90,000 should be credited to Rahim account. So joint venture account debit to Rahim account credit. Now plant valued 1 lakh. Taken by Rahim. Rahim is the receiver. Debit the receiver. Rahim account debit. Plant goes out of the joint venture business. It is sales proceeds of, or it's a revenue for joint venture. So joint venture account is to be credited. Rahim's account debit to joint venture account credit. Now 24 lakhs are received by whom? Ram. I am Ram. I got 24 lakhs rupees. But it is not my personal income. It's an income of joint venture. Income and revenue of joint venture should be credited to joint venture account. So bank account debit to joint venture account credit. So all the transactions of joint venture are recorded in this joint venture account. Now I want to find out profit. Total of credit side is 25 lakhs. Minus all these expenses, so I'll get the net profit 4 lakhs. That will be distributed equally. My share in profit is 1/2 of 4 lakhs, 2 lakhs. And share of Rahim is 1/2 of 4 lakhs, 2 lakhs. So Rahim is to be given 2 lakhs and my profit will be transferred to my profit and loss account. Rahim account is credited with this profit. Now total amount to be paid to Rahim, 11,90,000 plus 2 lakhs, 13,90,000 minus 1 lakh. So 12,90,000 will be paid to Rahim. Rahim is the receiver. Rahim account debit to bank account if the payment is made. If the payment is not made immediately, then you can write balance carried down. This is how it should be recorded. Now I want to record all these transactions in the books of Rahim. Rahim also prepares joint venture account, but Rahim prepares Ram account. Rahim cannot prepare his account in his books of accounts because Rahim cannot transact with himself. So Rahim cannot prepare Rahim's account in his books of accounts. Rahim can prepare Ram account. So once again, expenses paid by Ram, joint venture account debit to Ram account. Now Rahim has paid 5 lakhs rupees. Joint venture account debit to bank account in the books of Rahim. To bank. Notice it. Cement paid by Ram, joint venture to Ram. 1,70,000 paid by Rahim, joint venture to cash or bank. Wages paid by Rahim, joint venture to bank. Ram paid architect fees, joint venture to Ram. License, so this is a total payment, 9,10,000 credited to Ram's account. License fee paid by me, joint venture to bank. Plant paid 2 lakhs, joint venture to bank. Now, after completion of the work, I got plant back at a value of 1 lakh. So in my personal capacity, I am Rahim, I have got the plant account debit. It is a revenue of joint venture business. So joint venture account is to be credited for that. So plant account debit to joint venture account credit. That is the entry in the books of Rahim. Now 24 lakhs rupees are received by Ram. Sales proceeds of means contract price is received by Ram. Ram is the receiver. Ram account debit. It's a revenue of joint venture. Joint venture account is to be credited for that. Now find the profit of joint venture, 25 lakhs. Minus these expenses, you know the profit 4 lakhs. That will be distributed equally between Ram and Rahim. Share of Ram is 2 lakhs. That will be transferred to Ram's capital account. Share of Rahim 2 lakhs will be credited to the profit and loss account of Rahim. So Ram account is credited with 2 lakhs. So 24 lakhs minus 11,10,000. These are the proceeds to be received from Ram. So there is a debit balance of 12,20,000, amount balance carried down 12,20,000. But if the amount is suppose received, then bank account debit to Ram account credit. That is the entry that gets recorded. So for this transaction, I have prepared the book of, I have recorded all the transactions in the books of Ram as well as Rahim. I have also mentioned you the various journal entries while recording the transaction. I feel that you have followed all these things.